Okay, good morning, everybody. I can see there are still some people joining, so we will get started, and you're all very welcome to join in as we move along. So this morning's webinar is covering financial management in times of uncertainty. One of the really enjoyable parts, I suppose, of putting this webinar series together has been talking to such a wide range of different people and asking them to take part and to give up their time, their expertise. And there's no better example, I suppose, than today's session. So when we contacted Mark McEnroe, who is Deals Partner at PwC, not only did he say yes to helping us out, but he also brought along two of his directors in Deals and Advisory Services, Laura Gilbride and Ray Egan. And so we're really delighted to have such an expert team with us today. And each of them are going to bring something different to the table in terms of helping you navigate financial issues in this current climate. And today's facilitated session is going to be led by Suzanne Burtis. Suzanne has been a very close colleague and friend of mine for over 14 years now, and I have seen her expertise in dealing with students at all levels within Griffith College in both the business faculty and the graduate business school. So I'm really looking forward to Suzanne's session as well today. As a non-accountant, I know it can be a little bit challenging sometimes to get our head around some of these topics. But from listening to the guys in the Zoom preparation meetings, I'm pretty sure you're going to get a lot out of today's session. So I do hope you enjoy it. Please do remember to ask any questions that you have. The Q&A function is there, and we will get to all of your questions throughout this morning's webinar. So on that note, I'm going to bring in Mark. So Mark, as I said, is Deals Partner at PwC, and he is going to start our webinar this morning. So thank you, Mark.
Thanks, Eilish, and good morning, everyone. I'd like to start just briefly by saying a big thank you to yourself, Eilish, to Griffith College and to ISME for the invitation to speak to you today. I know, companies up and down the country are going through very challenging times. It's an important part of PwC and our values that we look to solve important problems, and there are some very important and very challenging problems going on out there, and we recognize that it's difficult at the moment for a lot of businesses out there. As Eilish mentioned, my name is Mark McEnroe. I'm a partner in our deals practice, and I've spent 16 years of my career with PwC helping companies with their capital structures, and so helping them as they're looking at potentially raising debt, potentially raising equity, thinking about what the right mix might be, also helping around transactions, acquisitions, divestitures. I'm joined today by Ray and Laura. I'm delighted to have them with us. Both Laura and Ray have been working with companies since the crisis evolved. I've been working with companies up and down the country, and I've been working with banks up and down the country. So we thought it would be good to get them on the line and to give some practical examples of where companies are trying to navigate the funding landscape that's out there, and how what the bank's perspective on the funding landscape out there might be. I know that Suzanne is going to do a very good and a very detailed session later on in terms of the mechanics of working capital management, the mechanics of financial modeling, etc. So we're not going to get into that. We've about 20 minutes at the start today. And what we wanted to do was, I'll spend a little bit of time just setting the scene in terms of what we're seeing in the market and what we're seeing with our client base. I'm going to bring Laura in then, who's going to walk us through an example of a company that she's been working with recently, looking to access SBCI funding. And I'll probably grill her and ask a few questions around that, and then going to bring Ray in for the perspective on the banks. I do know that there's a question and answer facility on this, so I think there's a mechanism whereby you can raise and ask questions. So feel free to do so, and we'll try to get to those at the end. I think we've about 10 minutes allotted to questions at the end. So what are we seeing? look, for all of you out there that are owning, running, leading, managing, operating businesses, this is as challenging an environment as I've ever seen in my career, and I worked and lived through the 2008 crisis. And it is unprecedented, and I think when we get to the end of 2020, unprecedented might be the word of the year, because it is very much an unprecedented situation that we're in now, whereby essentially governments around the world have put their economies to sleep or put their economies on ice, and for a lot of companies out there, and we're all aware of the hospitality sector, retail sector, whereby the revenue line has essentially just fallen off a cliff. But it's not just those two sectors. I'm talking to clients up and down the country across every single sector around the economy, and I've yet to come across a company that isn't being touched or impacted by it. Everything from software technology companies through to obviously the aviation finance companies. It really is very, very widespread. And what companies and people are dealing with in the first instance is a liquidity crisis. If your revenue dries up or your revenue drops by 50% or 25% or even 10%, that can have a very material impact on your cash position. So the first challenge that business leaders and managers are having to address is that liquidity position, and we will spend some time talking about that today. Coming out of the crisis, there's also going to potentially be an insolvency challenge, whereby when companies, as they look to exit, they will need to look at their overall capital structure and say, how does this stack up now? There will be VAT repayments that have been deferred. There'll be POIE repayments that will have been deferred. There will be additional overdrafts that will have been taken on. So the structure of a company's balance sheet is going to have changed fundamentally from the point in time of going into the crisis to coming out of the crisis. I know that there was a previous session around some of the various government schemes that are out there. So I'm not going to get into a huge amount of detail. What I will say is obviously there was an announcement last week that expanded the supports from government to a support package of €1 billion. And I believe Minister Heather Humphreys indicated that there was more to come in the coming months. We don't have clarity on what they are. We've put together quite a detailed and comprehensive overview on the PwC website. So if you want to go to the PwC website, you'll get an overview of it. But the key ones that I would say to you is obviously the SBCI, there's a working capital support scheme there, there's a future growth support scheme, and there's a credit guarantee scheme. And there's also Enterprise Ireland, and they've got a number of different supports, as do the Department of Communications around online trading, as do Micro Enterprise Ireland. So there are a range of supports out there. It is very important, and sorry, the other I didn't mention is the wage subsidy scheme. It is very important that you're doing what you can to ensure you can access those at this time. What in summary, in terms of setting the scene, first and foremost, I think you need to ensure that your business survives this crisis, and that really does come down to liquidity and cash flow management. Secondly, you need to start thinking about how the business is going to look and what your finances might look like coming out of this crisis, and all that requires upfront work on your financing, on your existing structures. So two key things that you need to ensure that you have, and I'm sure you've been hearing this to death, but you do need to have an up-to-date business plan that will be required to access any of the government supports, and you do need to have an up-to-date cash flow forecast. Again, we do have a template cash flow, 13-week cash flow model, which we're providing to clients. So if there is something that, if that's something that might be helpful, do get in touch. So look, that's enough for me in terms of setting the scene. Let's get down to kind of the practicalities. Laura, you've been working with businesses on preparing business models and forecasts. Can you walk us through a recent example? And I believe this recent example was for accessing SBCI funding through one of the pillar banks.
Yeah, good morning, everyone. So I've been working with a number of different companies, some of which have been impacted to a certain extent in that revenues may have declined by about 20%, and others, unfortunately, where their revenues may have essentially fallen off a cliff. The example I'm going to use this morning is a services related business. It's a small business. It has about 50 employees. This business, unfortunately, has no revenue at this time. So prior to COVID, it had been experiencing really strong year-on-year growth. As of mid-March, it pretty much has no revenues, and it doesn't anticipate having any until August. So before I get to say the business plan and the SBCI funding, I think it's actually worth spending a minute on what did this business do first. So the very first thing it did mid-March was it created a 13-week cash flow forecast. It did this in as simple and as quick a manner as possible. In Excel, it looked at all its cash receipts, money owed from customers, cash that sat in its various bank accounts, any overdraft facilities it had, etc. And then it literally deducted week by week, month by month, its mandatory payments to creditors, payroll, etc. I'm not going to go into too much detail on the mechanics because I know Suzanne's going to spend time on that. But essentially what this early forecast showed is that the business was going to run out of cash by August, assuming it had no revenues for that period. So what this did was it enabled decision-making, fast decision-making. It said to management, we need to get financing immediately to fund our working capital up to this period of August. And in the event business doesn't ramp back up in September like we hope, we need additional financing we can pull down at that time. So using this information, it was able to determine, let's go to our pillar bank and let's apply for SBCI funding. Let's also apply for an overdraft from our pillar bank. And this business actually has a UK subsidiary as well. So it went to a bank in the UK where it's not an existing customer, so it would have been a new customer, and applied for an overdraft there. So that's sort of the steps it took on the financing. On the business plan side of things, so in order to apply for SBCI funding, you need to complete a business plan. There is a business plan template online, and it asks for things like overview of the business, what funds you're looking for and use of funds. This is sort of your upfront paragraph, and it's important to spend a little bit of time on this because there are permitted uses under SBCI, funding of future working capital and funding for any innovation or change or adaptation required as a result of the pandemic. In the business plan, you can complete this in a Word document in about 4 pages. I would say keep it simple. You touch on your competitors, your clients. The template is there, so just follow the template and put in your information there. So I'm just going to pause there, Mark, and see if you want to...
So, yeah, look, I think you've covered a couple of important topics there. You know, get a financial model in place, get a cash flow model in place. But so far, you know, has the business looked at performing anything more detailed or sort of longer term in terms of what things might look like coming out of this crisis?
Yeah, so really what I've kind of overviewed there is the immediate liquidity issue. So what's going to happen over the next 1 to 4 months? There were 2 other things they did in parallel. So one was further analysis and action. So similar to a lot of the businesses on this call today, they did cost cutting initiatives. But really what they focus on as well is what are the key value drivers in our business? So when our business ramps back up, what's critical that we have in order to succeed? So for some businesses in manufacturing, this is going to be around their supply chain raw materials. This is a services business. So what they need to succeed are their people. Their talent is absolutely critical. So they decided what we really need to prioritize is holding on to that talent. So they availed of the wage subsidy scheme. It was really important to them that they could keep paying their employees. The other thing they did was they're using this time to upskill their employees. So that means online courses and availing of new digital tools. And this is part of the use of their SBCI funding. The reason they're doing this is that in their best case scenario, they're actually anticipating a surge in demand in September because their clients will need to regain market share that was lost during this period. So they may want to ramp back their activities even quicker. And this client needs to be in a position to deliver more services, possibly remotely still, or some element of remote working, and possibly with a smaller workforce. So maintaining their talent was key. The other value driver they identified was their clients and their relationships with their clients. So they're maintaining regular contact with their clients and offering any support they can, even on a pro bono basis. Of course, they've looked at things like engaging with landlords around rent. And the other thing they looked at, and again, this is why financial analysis is so important. They looked at their insurance policies. So when they were doing their 13-week forecast, they said, okay, can we put an assumption in there that we're going to get a payout from an insurance company? We actually had a look at their policies with them, and it very quickly revealed the way the policy was written, they're not likely to get a payout. It's just not, written to really deal with the event as it's unfolded. And what that enabled management to do is say, right, instead of spending hours or days on the phone in contact with our insurance company, we're just going to park that because it's not going to be a worthwhile way to spend our time, and we're going to refocus our energies elsewhere. So again, a little bit of financial analysis enables those quick decisions. I think the other thing, Mark, that's kind of worth touching on there is what I touched on so far is their 13-week forecast, but actually that was for decision making. So in order to go to the banks and look for funding, you need to do a more granular forecast. So what they've also done is a monthly P&L cash flow and balance sheet forecast for 2020 and an annual forecast for 2021 and 2022. So that's the other exercise.
So for lots of businesses out there, Laura, like that's a really tricky thing to do, and even trickier to do right now. How do you make that call? How do you decide, when business as usual is going to come back? What will business as usual look like? Do you just have to make an assumption, or how do you go about that?
Yeah, it's a really good question, and it's a question we get asked time and time again. Essentially what you're asking is, how do you actually build all this uncertainty into a forecast? So I think the first thing to think about is, for a number of people on this call, you may actually already have experience with this. If you have built a budget or forecast for your business over the last 3 years, you have actually modeled in uncertainty, because we've all been planning around Brexit. Is it going to be a hard Brexit or a soft Brexit? So to do this, you may have actually created, what does our business look like in the event of hard Brexit? What does it look like in the event of soft Brexit? So what you did there was you created scenarios. So dealing with this is actually a similar exercise. And for those of you who've never done a cash flow forecast, there are tools available, and I'll touch on them later, and I know Suzanne's going to go through them in more detail. But essentially, instead of spending all your time and energy on focusing on what is the most likely outcome, you're not going to be able to determine that at this point. So create scenarios, best case, worst case, and middle ground, which might be the most likely scenario. And the way in which you do this is you make an assumption around your revenue. So if I can go back to the company I was using as an example. So let's assume worst case for this business looks like 0 revenue for April to August, 20% of their original forecasted revenue for September. So say they had assumed they were going to earn 100,000 in September, we're now forecasting 20,000, and so on and so forth. What you assume about your revenue line will actually drive then the assumptions around your cost of sales. You also need to build in assumptions around, if you've deferred your VAT, for example, when is that going to fall due? Or if you've frozen interest or principal repayments on debt, when will those fall due? And you need to build them into your model. So that's your worst case. It's human nature to not want to explore worst case, but you need to do it. And your worst case should actually form the basis by which you're going to source your funding. You need to prepare for that worst case. So then you can create 3 different tabs in your Excel, worst case, best case, middle case, or if you're a little bit more sophisticated, you can actually create assumptions which you can click and drop, but we don't need to go into that. So that's sort of the way I would advise in building in uncertainty.
Very good. And when this company engaged with the banks, did they get any guidance from the banks as to how to do any of that?
It's sort of a mixed bag, to be honest, Mark. And that's a good question. You always need to think about why are you actually doing your forecast. So the forecast you build for internal decision making may be slightly different in either level of detail or your scenarios to the one that you give to the banks. And the reason I say that is when you're engaging with the banks, ask them what they want to see. How much detail do they want to see? Is it sufficient to do a monthly forecast for 2020 and then an annual forecast for 21 and 22? The reason being, and I think it's in this case study here, when this client engaged with RBS in the UK, what they asked for was, in addition to the business plan, we want to see a monthly forecast for 2020 pre-COVID. So if COVID hadn't happened, what would your business have looked like? And then actually one accounting for COVID. And then for 2021 and 2022, we RBS are actually going to assume that those years look like they would have if COVID hadn't happened. So this said to this client, well, look, don't waste your time redoing 2021 and 2022. Use that time for something else. Now, I have to say, this is not consistent.
That seems like a generous forecast or generous approach to it. I'm not sure you'll get the same mindset from the Irish banks.
I agree. It's not consistent with what we're seeing with the other banks. If your bank isn't giving you guidance, and I can speak to sort of Bank of Ireland, in my experience with this client, they didn't give specific guidance. I would err on the side of being conservative. So just say, okay, I'm going to model out maybe my worst case to middle case scenario, and I'm going to link 2021 and 2020 to that. So you might say, right, does revenue grow by 5% in 2021, 10% thereafter? So if you've no guidance, err on the side of being conservative.
Right. Okay, look, before I move over to Ray, you mentioned a couple of tools that might be available. Do you want to just touch on some of them?
Yeah, so obviously, Mark, you've talked about the tool that we have. AIB and Bank of Ireland both have really good tools on their websites that anyone can pull down into Excel. And I think Suzanne is actually going to show some of them to you later on.
Great.
But I suppose the answer is that there are tools out there. I know this can be an exercise a lot of businesses won't have done before. So please do use the tools and templates. I think it'll save you a lot of time.
Great. Good stuff. All right, Ray, can I bring you in? You've spent a lot of time liaising with the various financial institutions. How are they seeing things at present? There's a bit of an echo on your line there, Ray. I don't know whether we can solve that.
Wait 1 second, Mark. Is that any better?
Yeah, much better.
Morning, everyone. I hope you're all keeping well. I've spent a lot of time over the last couple of weeks liaising with the various financial institutions, and I suppose they've been quite busy over the last couple of weeks in the initial phase in terms of dealing with the initial working capital requirements, overdraft requests, payment moratoriums. The feedback we're seeing from the banks at the moment is that we're seeing a tapering back on that at present. So the initial peak of requests seems to have plateaued to an extent. Now, that's not to say that there won't be additional requests over the next couple of weeks. Businesses have different working capital requirements. But for now, it seems to be moving away from the initial phase and bedding down into the second phase, which is ultimately preparing businesses to stand back up. And I suppose people should be taking the opportunity at the moment to look at what the working capital requirements for their businesses are going to be once they do get to that phase in terms of reopening over the next couple of weeks and months. As part of that, as Laura alluded to, I mean, reforecasting, cash flow forecasting for 2020-21 is going to be a key component to that. Looking at the various scenarios, your best case, worst case, middle case scenarios, and really thinking about what business is going to look like for you when you do get back to trading. It's going to be different for everyone. Business as usual might kick in straight away for some businesses, might be other businesses that start down a certain percentage in terms of turnover and gradually work their way back up. And there might even be a scenario where certain businesses see a spike in demand and turnover initially when they reopen, purely due to the pent-up demand from customers.
So, like in terms of a business's various stakeholders, what are the benefits to talking to the business's various stakeholders? And can you talk to us about how this might play out a little bit kind of in the longer term? So there might be lots of short-term debt, that kind of stuff being taken on. How might some of that play out in the longer term?
Yeah, I mean, ultimately there's a lot to be taken into consideration now that probably wouldn't have been there from a balance sheet perspective back at the end of February, start of March. There will be additional debt pre-shutdown. There'll be additional accrued liabilities that are being incurred.
Eilish, I'm not sure if you're experiencing the same challenges with Ray's line.
I am. Ray's sound is having a bit of an issue there, I'm afraid. I've stopped the video, Ray, to see if that improves your sound quality. Sometimes that will help.
What we might do is, I'm conscious we've gone over the 20 minutes already, but what I might do is just touch on a couple of the points that I think Ray might have alluded to, and then we can go to Q&A from those that are watching. So, look, as mentioned, you know, Ray's out there talking to the banks to try and understand how this might unfold. I've had several conversations with all the pillar banks at this point. One of the key things, and I mentioned this at the start, you know, you're going to need to think about how your business might look coming out of this, and how your balance sheet might look coming out of this. And a lot of the funding that you're taking on now to manage through the liquidity crisis is essentially kind of short-term funding. So, Ray, I might ask you to just go on mute there. So a lot of the funding that you're taking on is essentially short-term. So you've got the government supports in terms of delaying VAT payments, delaying PAYE payments potentially. You've got potentially increases in overdrafts if you've been able to get that from your bank. You might have some additional funding from SBCI. And when you take stock, you'll need to look at it and say, well, you know, is it realistic that all of this is short-term funding? And it probably mightn't be. So there's a concept called terming out, which might be saying, okay, it's not realistic that any of this debt could be repaid in the short term, but what might it look like in the longer term? The other piece of the conversation that you might need to think about is there some element of an equity solution to this, as unpalatable as that might be? Really, I think from a banking perspective, that was kind of what we wanted to cover. But maybe we can open it up now, Eilish, to any questions that there might be out there.
Yeah, perfect. Thank you very much, Mark, and Laura and Ray. Sorry, everybody, for those sound difficulties. We've a couple of questions in. So firstly, we have a question from Letitia. And Letitia is wondering, I'm not sure now, you might know the answer to this. Are representations being made to the government about similar loan schemes as brought in by the Swiss government? It's a very user-friendly one-page application.
Yeah.
And the German government are now looking to bring in similar.
Yeah, I read an article a little over a week ago in the Financial Times in relation to the Swiss system, and suffice to say, I'm envious because it's a phenomenal story and it's very impressive. One-page application form. They've got various bots and scanners and algorithms that just read the application form, and the money can be within your account within 1 to 2 days. I know that the various bodies that are representing business have been discussing similar things with government as to whether or not we end up with a system that's as efficient as that. I wouldn't hold my breath. I think that right now that the systems that are in place involve you going to the SBCI, filling out an eligibility criteria. They will give you a cert of eligibility, and that eligibility criteria document is on their website. And they will give you a cert of eligibility, as I said, and then you need to go to the bank with that. That's for the SBCI. Micro Enterprises Ireland has a similar process. But I think best thing to do is focus on trying to work through the system as best you can, and then hopefully the employer and business bodies will be lobbying government for increased efficiency in terms of how the process is actually administered.
Okay, that's great. Yeah, there's a question here from Richard as well. Possibly one for you, Laura. How many of your clients have issued pay cuts, and how are they managing annual reviews that were scheduled to happen at the same time as this crisis? Are companies paying bonuses from last year's accounts due now? If you can obviously give any broad oversights. I know you can't obviously talk specifically.
it's I'll let you come in as well, Laura.
Yeah.
Look, it's a tough question. Clearly, there are, if a business has been impacted to the point whereby revenues are down 25% and that might have wiped out all profitability, it's very hard to see a scenario whereby bonuses would be paid in a business like that. And it's very hard to see a scenario whereby people would be able to maintain the same salary levels that they have maintained to date. It very much is on a business by business basis. I've clients that have had to, lay people off, and I did so very quickly after essentially their revenue disappeared. And I've clients that to date have made no changes and have made no pay cuts. So it's a really, really tricky issue. And you want to make sure you handle it as sensitively as possible. And you want to make sure, that whatever decisions you do take now don't damage your ability to come out of this, because we will come out of this. I'm ever an optimist. Where business is extremely resilient and business owners are well capable of riding through the most challenging of times.
Yeah, I think I can only give some more, say, specific examples. So two businesses I know of have implemented temporary 3-month pay cuts. One was a flat 20%, another one was a tiered one based on your salary levels. I know of a company whose year end is as of March. In that instance, they did pay out their bonuses because the financial year had completed. They then a week later implemented a temporary pay cut. So it's very much a mixed bag. And I think, as Mark alluded to there, kind of communication is a key thing, and it has to be assessed on a case by case basis for each business.
Okay, that's brilliant. Thank you. We have a question from Zoe then, who is asking, what is your feeling in terms of the wage subsidy, in terms of clawback? Should we also consider this as a short-term loan in projections?
So I suppose, firstly, there's detailed criteria around what the impact on your business needs to have been in order to claim for the wage subsidy scheme. So if you are claiming for it in good faith and you are confident that your business has been sufficiently impacted and you meet the criteria for the wage subsidy scheme, well then I don't think you would necessarily need to be forecasting or budgeting that is going to get clawed back. If you feel you're on the borderline, or if you're certain that maybe you've claimed it and you shouldn't have claimed it, or you didn't meet the criteria, well then absolutely I would be planning for the fact that you may need to repay that at some point. Revenue may not be the most the quickest organization in terms of processing through things, but they're pretty diligent. So the long grass is there, shall we say.
And I think the only thing I'd add to that is, if you're thinking about your model or your forecast, is that there are taxes due on those wage subsidy payments and they're not being deducted at source. So there will be a liability at some point. Now the onus is on the employee to cover that liability, but revenue haven't, now to my understanding, I only checked this a few days ago so it may have changed, communicated exactly how that's going to be collected. They may do it by actually reducing people's tax credits in the following years, but it's just something to be aware of. There is a liability there that may need to be reflected at some point, even though the onus is not on the employer to pay the liability. But the collection scheme, I think, is in the works as to how they're going to do that exactly.
Yeah, that's great. And I think it's, again, reinforcing some of the key themes that we've heard over these webinars of communication, just, do things right, talk to people and make sure that you're managing everything properly, because the future is there and is going to happen. Yeah, absolutely. A question from David. Great to see you with us again, David. Would you be able to provide links to the 13-week template form and the online business template that you mentioned, Laura? For those that are not knowledgeable in the sector in particular, it might be very useful.
Yeah, I think
sorry, go ahead.
I was going to say, I know Suzanne's going to touch on the sort of some of the bank available ones. And Eilish, you can give us guidance on how we can share links. Absolutely helpful to share those links, whatever format you guys are using. I think, Mark, were you going to touch on
No, that's fine.
Yeah.
I was going to mention the same. Suzanne is actually probably going to provide it later in the session.
That's great. And yes, we'll make whatever resources we get from you guys, we put them available up on the course page as well, so people will be able to access them afterwards. So that's wonderful. Cathal then is asking, is there any indication from government around the extent of time these COVID support schemes will be in place for, like the wage supplements and so on?
I don't know, Laura, are you familiar as to, is there an end date for the wage subsidy scheme?
Not to my knowledge. The only update I saw was as of yesterday evening, they're actually increasing it to 85% for certain lower wage incomes. So I don't know is the honest answer. I'd say just keep watching the relevant websites. It's not something I know of.
I suppose it's just an evolving situation, isn't it? They probably don't know themselves at this point. It's still all in the works. And Trish, great to see you again as well, Trish. Hi guys, I've applied for a microfinance loan through my local Leo. The interest rate is 4.6%. Surely with base lending being low, this is very high in these circumstances. Would you have a view on that? Or?
Yeah, there's an issue around an accounting standard that I'm not an expert on, but there's an issue around IFRS 9 and forbearance. I know there is appetite potentially within government to be able to provide loans at a lower interest rate maybe than they might be currently being provided, and I'm sure it is something that they're looking at. But there are some technical issues or challenges around it. That's probably as much as I know on it. But yes, you know, if you look at where the base rate is now, ideally, so some of these funds would be, and I know in other countries and other territories like Switzerland, for example, up to a certain threshold, it's interest free, and above that threshold, it's at 1%. Again, it would be great if we could see something similar for business here in Ireland, but I don't. I'm not in the Department of Finance, so unfortunately, I don't have control of those sort of issues.
Okay, thanks for that. A question then from Paul. So Paul, they run a fashion design academy for children, running classes nationwide. They have a large amount of bookings for classes and camps which have been paid for upfront. Easter camps have been cancelled, and they've tried to transfer them to the summer camp. However, some want a full refund. We would in normal trading have a non-refundable deposit as part of that fee. Do you think we should offer a credit or gift voucher only for all monies paid, like I see many companies doing?
Tricky question, and I'm not an expert on the topic, because essentially it comes down to what the consumer rights are. I know my own wife was looking to, over the last 24 hours, to see about flight refunds, etc. And Aer Lingus provided a full refund for a flight that was still going ahead. And I know we certainly appreciated that, but I recognize with a business like yours, you know, those refunds could be the straw that breaks the camel's back in terms of your own cash flow. So firstly, I think you just need to make sure, what are your legal obligations? And then secondly, is there a way within those legal obligations, is there a way to maybe put forward a proposition or a proposal to those customers that might be palatable to them and might allow them to support you through it in, you know, a voucher scheme or something like that? I don't know, but yeah, apologies, not an expert on consumer rights.
Yeah, I suppose there's a couple of strands to that as well. There's the whole PR side of it as well, in terms of relationships with your customers and so on. So yeah, it is definitely a tricky one for you, Paul and Paula.
I anecdotally, I heard again, Switzerland, it seems like the promised land in terms of how they're managing this crisis, but I heard anecdotally of communities whereby not only are people not coming looking for refunds, they're actually continuing to pay for and buy additional classes for dance classes and things like this, because they want to continue supporting and they want to keep money flowing in the economy. But yeah, that's maybe we need to move to Switzerland, I'm not sure.
And just two more questions for you guys. The first one, or the second last one, I suppose, is from Ray. If you're self-employed and have to claim the COVID payment, will this be subject to tax considered in your end of year returns?
Not a tax expert. I would expect that it would be. Now, you will have some benefit in that the level of the payment only goes up to a certain level. So therefore, the thresholds and the tax bands will probably ensure that the amount of tax you might be paying on it will be limited. But yes, I do believe that there is a tax liability again. But again, caveated, not a tax expert. So do get proper tax advice around it. I am not proper tax advice.
No, well, we actually have, so on the 23rd, we're going to have Tom Maguire, who is a tax expert for sure, and Paula Byrne doing a session on the tax implications. So Ray, that might be one for that session on the 23rd next week. So do join us for that one. I have one question to finish off, which I think is a nice question to finish on. And it's coming from Patrick, who's actually joining us on YouTube again. So great to see you again, Patrick. And he is just wondering, what is PwC itself doing as a business in these circumstances? So what have you guys had to do to adapt and change and manage and survive?
Yeah, very, very good question. I suppose first and foremost, we were somewhat lucky in that we had invested quite a lot in our technology over the last couple of years. You know, while it hasn't been 100% seamless, I would say it's been pretty close to it in terms of us being able to work remotely. We've always had a work from home policy whereby people can work remotely, people can work flexibly. This obviously took that to the nth degree. So that's been something that was, I suppose, of benefit to us. We've been spending a lot more time thinking about our employees and thinking about what these changes in work practices mean for our employees. So we've always had quite a focus on mental health within the organization. We've been running seminars and webcasts around mental health so that anyone can dial in and understand, you know, how they should be managing things throughout this, because it's vitally important that everyone maintains not just their physical health but their mental health throughout this. You know, our objective is to make sure that we can support clients, that we can support government where we're asked to, that we can support the HSE where we're asked to throughout this crisis. And we've been doing all of the above throughout it. It's really, look, it again, to go back to my word earlier, it is unprecedented times. But thankfully to date, we've been able to switch to remote working without really missing a beat. And all of our teams are trying to stay engaged with each other, stay engaged with clients, and help our clients where we can.
That's great. And you've been here today is another classic example, I suppose, of doing your bit and contributing in these difficult times. So I see a question after coming in from Cathal. Cathal, I think Suzanne might be addressing that in relation to the different financial supports that are available. But if your question isn't answered fully in that session, do let us know. And what we can do is a follow-up question. Mark and Laura and Ray have kindly offered to do that if we need to.
Yeah, we can send you a link as well. We've got a very short sort of 2-page summary of the SBCI, Enterprise Ireland, Microfinance Ireland supports that are out there. It's not exhaustive, but it gives a very good summary, so we can get you a link to that you can maybe put up with the notes.
Wonderful. Yeah, Cathal is specifically talking about, you know, trying to diversify his business now. So I suspect something like the Enterprise Ireland or Microfinance maybe the route needs to go. And then not a question, but a lovely note, and again, an example of the peer-to-peer. Alice is just replying to Paul and Paula, who own the fashion design school. And she is saying that she also has a small family business providing a service. And she sent out an email to all of her customers explaining their situation. She did not ask for money, but she has received payments from some clients who haven't even booked with them for over a year, sending them money to show support, a straight bank transfer as a donation. And I think being honest with your clients is the best move, and some loyal customers may be in a position to help you. And I'm aware of that actually
Great to
locally,
hear.
from a local cafe as well, who've been making meals for elderly people, and they've received a lot of donations here in Kildare. So yeah, that's a wonderful point, Alice, and definitely good feedback as well, and a great idea, and lovely to hear. Okay, so on that note, I'm going to say thank you very much to Mark and Laura and Ray. If we do have other questions as Suzanne's session progresses, I'll touch base with you in the next day or two. So to all of our participants, don't worry. Any queries you have, you can keep them coming through the Q&A function, and we will get them all answered for you in due course and up on the course page. So Mark, Laura and Ray, thank you so much for your time, and great to hear as well of all the activity that's going on at PwC at the moment. So now I'm going to hand you over to Suzanne, who is going to take you through a more practical session. And thank you very much. Thanks, Suzanne.
Hi Eilish, how are you doing? Hi everybody, how are you? Hope you're all keeping well in these difficult and challenging times. Thanks very much to Mark, Laura and Ray there for an excellent presentation on the financial management issues facing businesses. I'm going to take you through other financial management issues. A lot of what they covered I'm going to cover with you in more detail, if you like, and hopefully I'll have time to answer any questions you may have at the end of it. Just in relation to myself, my name is Suzanne Burtis, and I'm a senior lecturer in Griffith College. I work in the undergraduate faculty, the postgraduate faculty, and also in the professional accountancy faculty. I myself am a professional accountant. I started my career when I left school first. I went into marketing in the College of Marketing and Design and did a marketing degree, and joined a small business, an Irish retailing ladies clothing firm who had shops in Dublin and Wexford. And I stayed with them for about 13 years, first of all in the general management of the businesses, but then I moved kind of back office and went into accounting, followed up by getting my accountancy qualification and working internal audit with them for a period of time before deciding to leave the business and move into education. So that's my background. I am a qualified accountant with a marketing degree. I started my career in the spend sphere, and then I moved into the save sphere when I moved over into accountancy. As Eilish mentioned at the beginning, I've shared an office with Eilish and Griffith College for many, many years, for over 10 years. And I probably softened my accountancy bit a little bit. You know, I would have been the original person to walk into the room and my first answer to any question would have been, no, you're not doing that, you don't have the money. I've probably softened it a little bit more over the years working with Eilish. So this is my background, and this is why I'm presenting to you here today. We're going to look at financial management. It is the heart of an organization's success, and it is essential to the long-term sustainability of an organization. I mean, we're all aware at this stage, cash is king. No cash, no business, simple as that. And financial management then is the planning, organizing, directing, and controlling of the financial activities of an organization. So the session objectives here today, first of all, to gain an appreciation of working capital crisis management. I'm pretty sure all of you as successful business people have good skills and knowledge and expertise in managing your working capital, but businesses have experienced quite a successful run in the past number of years, and perhaps your crisis management isn't fully up to speed. One would imagine now 3 to 4 weeks into this isolation period that many of you have already dealt with short-term liquidity issues, but there are still further short-term issues to address before preparing for the long-term return to business. So we'll be looking at working capital crisis management, hoping that the analysis of our working capital will provide key support for decision making. Laura mentioned earlier how important it was to have the evidence available to you for quick decision making. We're also going to consider the current economic factors and the impact that has had on many different sectors. I will briefly identify to you the related financing sources available to businesses from government and other sources, and how to maximize those sources of finance. And we look at eventually using the banks and using your accountant to build resilience through this crisis, and also sustainability for the future. So that is the session order. We'll be looking at it from working capital management first. Then we'll be looking at the sources of support finance that are available to you from the various different bodies, etc. We look at then the budgeting and cash flow forecasting, again, which Laura and Mark alluded to earlier. The banks will insist on you having business plans in place. They're going to insist on you having cash flow forecasts available to them. Applying for a lot of the finance that exists out there is not a straightforward process. It is a complicated process. And as one of you has mentioned already, and Mark alluded to, it's much more complicated than exists in Switzerland and Germany, but it is complicated. And if you want the money, you do have to jump through a few hoops to get it. So we'll look at putting some of the information together that you might need for applications for these sources of finance. We'll then look at dealing with the banks specifically. We look at what the banks are asking for and how you can meet the needs of the banks in order to access your finance as quickly as possible. And we'll also look how you can use your accountant more efficiently and more effectively during this crisis times. So that's what we hope to get through. And we'll hope to address it all. If we run out of time, we'll put more information available, make more information available to you on the course page. So we'll start with the working capital management, in particular the crisis management. We're going to look at the balance between profitability and liquidity. Profit is not cash. You all know that, I would assume, at this stage. So many profitable businesses will still go to the wall once they have no cash to continue paying bills, etc. So we're going to look at, loosely, we're going to look at stock, debtors and creditors as part of your working capital crisis management. We'll start with the debtor management. Your customers who owe you money, the crisis problems they may be experiencing, their business trading may be restricted as a result of the of COVID-19 and the isolation and quarantine that the government has imposed upon us. Their business may be suspended entirely. So in the business, for example, that Laura gave an example of earlier, their revenue dropped to zero. So some businesses may still be trading, but at a much lower level. Others may be suspended at this time. Therefore, your current debtors may be unable to pay you, they may be unable to pay on time, and they may be unable to pay in full. So this will have a serious impact on your cash flow, your cash inflow, and you therefore will have difficulty predicting your current and your future income. First and foremost, the non-accountant head on me probably is going to tell you that what is most important is to have a good working relationship with your customers. They need to feel the love. They really do need to feel the love. And one thing this crisis has taught many of us is that talking to a machine is not very good. If we knew that before, we definitely know it now. Talking to a machine on the other end of the phone is not conducive to a good working relationship. You need to have personal contact with your customers, especially your significant customers. You need to be in contact with them on a regular basis. You need to keep them up to date. And we look at building good working relationships with your customers, but you need a name. They need a name. They need a contact. They need somebody they know that they can speak to and trust, and even just gain some confidence from having conversations with. So let's have a look at what you could do as a result of the business trading being restricted or suspended. The first thing you've got to do for your own business and for their business is to maximize current trading. So can you continue to sell to your customers at this moment in time, perhaps moving your business online? And one of you mentioned already that you have moved your business online, and there is funding specifically available for businesses that have moved online, and I'll touch on that in another slide. You do need to use all the supports that are available, and there are both financial and non-financial supports. The financial supports include grants and other sources of finance. The non-financial supports include online training programs for free. So it's important to investigate all the different supports out there to help you get your business up online, if that's the nature of your business and you would be able to continue to sell your products in this way. It is also important to maintain regular and personal communications with your customers if possible. You want to keep your customers loyal to you. You want to keep your customers informed. So regular and timely updates is important. Create a story for them and perhaps even a countdown to reopening your business. And it's not just about bombarding them with emails about, your products and your services. It is about the personal touch. It is about reminding them who you are and where you are and your product or your service and what you'll have available to them, hopefully when you open back up again, etc. Regarding the wider customer base, certainly use social media to communicate with the whole customer base effectively, but make sure you're providing accurate information and make sure you use those systems to dispel fake news. Certainly there was fake news doing the rounds, I think yesterday, explaining when the government was planning to open up all the various different businesses bit by bit again in the future. And it was purporting to come from a reliable government source. And it has been announced in the media today that that was completely fake. So it's important that you keep your customers up to date, you keep them on board, you provide them with accurate information, you dispel the fake news, create a good story for them and keep it personal, so that they're there ready to come back to your business when this is all over. Again, in communities, join forces with other businesses in your locality, and it's important to come together and work together as a network of contacts. Not only do you help each other get through this, but you also may provide new sources of customers to each other, etc. And you can work together for the benefit of each of you, and you can create a community of businesses that can communicate together to your entire customer base. So rather than just bringing customers back to your business, you're working with all the other businesses in your locality to bring customers back to the locality in general. So it is important that you join forces in order to assure your customers that you will be there at the end of all of this, back to some kind of normality, whatever that's going to be when we come out of all of this, and we will come out of it. It's just how we'll come out of it that is uncertain at this moment in time. Another crisis problem we said is that current debtors may be unable to pay or unable to pay on time, and they may also be unable to pay in full. So what can you do about this? Well, certainly communicate early and regularly with your customers. You need to understand their repayment capacity. Certainly in the very first presentation in this session, Musgraves were saying that it's not only important that your customers can pay what they owe you right now, but that your customers are still there at the end of all of this to continue engaging with your business. And it is important that we keep those customers on board. So communicate with them early, communicate with them regularly, understand their repayment capacity, and see if you can establish some kind of change in their payment terms and conditions. You will need to review the terms and conditions of the sale in the contract, and maybe repayment restructuring arrangements can be put in place. For example, can you spread out their payments? Can you offer them discounts? Can you agree to write off some of the debt, for example, if that would help you both in the circumstances? Also be aware of who your cash-rich customers are. You know, not everybody has been affected negatively by the current crisis. And not everybody who has been affected negatively is not in a position to pay. So you may want to offer, for example, cash discounts to cash-rich customers to encourage them to pay early, which in turn can increase your cash inflow into your business. So the key is to know where they're at, know how you can help them, know what you can do to maximize your input of cash or your inflow of cash, but also be aware that you want those guys there ready to do business again when you're ready to open up in the future. Also, a big problem you're going to have is the difficulty predicting the current and future income, and the 13-week cash flow forecast that Laura alluded to earlier is really important. I was investigating some businesses that were reported in the media yesterday who are doing a cash flow assessment on a day-by-day basis. So despite the fact they had a 13-week cash flow in place and even a 3, 6, 9-month cash flow in place, they are all predictions. And the situation is ever evolving and ever changing. And as a result, they were monitoring and flexing those cash flow forecasts almost on a daily basis. And these were businesses that were open and were up and running and were still operating, albeit in a different capacity than before. For example, some of the manufacturing units in the UK are now producing ventilators. This is not something they did before. Their supply chain is different. Their cost structures are different. Because of the social distancing, they can't use the same number of staff in the factories for producing the machinery, etc., the equipment, etc. So this was all having an impact on their cash flow, and despite their predictions in the cash flow forecast, they were still doing an adjustment to those figures on a daily basis. What is important is to try and understand your cash needs in the immediate term, in the near future, and in the longer term, and prepare cash flow forecasts for those periods. So certainly 3 months, then up to 6, 9, 12 months, and then 1, 2 years into the future. So what can you do? And as Laura said, the biggest problem here is predicting the inflow. You know, times are very different to what they've been before. We have never been through this type of crisis before. We've been through crisis before, but not this type of crisis. And our understanding of the situation and how it's going to evolve is very new, and it's also, our understanding is evolving on a daily basis also. But what you can do is investigate the current financial condition of your business, and that's really important, that you know right here, right now, today, how much money is in your account, for you to be able to use that money to keep the business alive, if you like, sleeping but alive for the next few months. So that means knowing everything. That means absolutely knowing everything in detail. So do your audit of your finances at this moment in time. Take out your bank account, take out your credit card account, take out all of the accounts you're using to spend money, for example, and to receive money, and do a minute assessment of everything that's coming in and out of your business, everything. It's important to understand the current financial condition of your business. It's important that you lock down the current financial position of your business, that you improve it when you need to, and that you spend money only when you have to, And you gotta be really strict and really rigid with this. But understand your current financial condition by doing a very detailed audit of your cash inflows and cash outflows through the bank account, credit card account, etc. Also, investigate the current condition of significant customers. It is important to understand the people who owe you money, what position they're in to pay, but also what position they're in to sustain themselves so that they're still here for you when all this is over. And whether that means doing a detailed face-to-face, well, Zoom, phone call, Skype, whatever way you want to do it, face-to-face conversation with your customers, you know, listening to your business network to understand the condition that certain customers are in, etc. It's really important to be able to make some degree of assessment of their capacity to come back to you when it's all over. And also investigate the current state of your industry and predictions. You know, there are certain industries who have been able to adapt quite quickly based on the needs of the government, the HSE, etc. While they may not be doing the same type of business as they were before and the same level of business that they were before, they are still doing business. They may decide that this is an area that they can continue with going into the future. They may decide that they want to go back to their original business, but as a result of changing consumer preferences and changing customer demands, we may not all be able to return to our original business format. You know, there are many businesses that believe that customers simply may not go back into retail outlets, and retail outlets were suffering already, but now so much shopping can be done quite easily online. Customers might decide that they prefer it, and that may be a whole change in that particular industry that's coming down the line. So certainly stay in touch with the industry that you're operating in. Investigate any industry reports on how that industry is performing. Certainly the ACCA and the CPA professional accountancy bodies have done detailed research, particularly the ACCA in the UK, of changes in industry as a result of what has happened, and they've done customer surveys to identify whether customers would be satisfied with the changes, want to go back to the original, etc. So do a detailed investigation of the current state of your industry and perhaps identify if there have been any predictions made within the industry for the future of that industry. Also the economy in general, you know, look at the government predictions, look at the European Central Bank predictions. What kind of growth rate, what kind of decline in growth are we looking at over the next few months according to those predictions? You know, what type of finance has been made available and packages have been made available? Certainly the EU have agreed on a 500 billion euro rescue package. It may not be sufficient. All the rescue packages they've announced so far have turned out to be insufficient, and they've added to them. But you know, what are the predictions for the economies going forward? Which economies are predicted to bounce back quicker, which ones more slowly, etc. And this could be really important for understanding your supply chain. If certain economies are going to open back up sooner, perhaps this will be a positive for your supply chain. Perhaps your supply chain is going to be in an area that is only currently being hit and are maybe 6 weeks behind where we are, and that might have a significant impact on your supply chain for opening back up again in the next 6 to 9 months. So you need to do very detailed research into all of the areas of your business that are costing money and making money, or have the capacity to make you money in the future. A very detailed analysis of it so that you can try and make some future predictions for cash inflow from customers. And as Laura and Mark alluded to earlier, certainly a high, medium and low impact prediction would be appropriate. So you do 3 predictions for each. If you're going to do a 13-week, a 6-month, a 9-month, a 12-month forecast, then for each of those time periods, You predict a high impact on your business, you predict a medium impact on your business, and you predict a low impact on your business. And in order to be able to make those predictions, you must have some degree of understanding of what condition you're in, your immediate stakeholders are in, your industry is in, and the economy in which you're operating is in. But for a high impact, you know, as Laura said, many businesses will already have been predicting an impact on their business of a hard Brexit and a soft Brexit. And both of those situations were highly unusual. They were not known, and they're still not known, because we're still not at that position yet, and we've been years trying to predict it. But, you know, perhaps a guide might be to use your startup figures, your startup year. You know, if you're trying to predict cash inflow, you might look at what your cash inflow was from your customers in your startup year. What kind of revenue did you generate in your startup year? Or if your business is old enough, you know, post 2008 performance, how did the 2008 crisis impact your business? And that might be your starting point to try and predict income from your customers in a high impact cash flow forecast. And it is important, you know, to be realistic. As a business owner, this is your baby, this was your creation, this is your livelihood, this is your life. And, you know, sometimes as a business owner, you're not totally objective in your view of the business. You have this grow for this business, you want this business to succeed, and perhaps sometimes the over-enthusiastic view of how your business could perform might impact on your objectivity when putting these cash flow forecasts together. So it is important to take a step back from it and not look at it from the business owner's point of view, my livelihood, my baby, etc., but from a very objective point of view, you know, what is the realistic outcomes here? And sometimes, because it is so difficult when it is your business, it's difficult to detach yourself from the emotional side of it, that perhaps, you know, expert advice on the matter would be better to help you make these predictions for the future cash inflows. In relation to creditor management, these are the bills that you owe and the risks you face at this time, depending on how your business has been impacted by the COVID-19. You may be unable to pay your debts. You may be unable to pay your debts on time, and you may be unable to pay your debts in full. This may lead to a loss of supplier goodwill. You know, it is the only free form of credit out there, so you don't want to lose that supplier goodwill. It could result in higher unit costs for your products and services. It could mean that you lose out on cash discounts because you don't have the money to pay early and avail of supplier discounts, and this could impact also on a cash flow if that would be your normal modus operandi. But again, it is really important to have a good working relationship with all your creditors, with your lenders, with your suppliers who give you credit, etc. It's really important that you have a personal relationship with them. They're much more likely to work with you when you have a good working relationship with these creditors. So possible solutions, obviously, and many of you may have looked at these solutions already, is to review the terms and conditions of your creditor contracts and identify any possibilities of changing those payment terms. So with your suppliers, for example, can you increase your credit days? Would they be willing to increase your credit days so that the debts are due further down the line? And will they accept piecemeal payments at this time? Can you establish some kind of payment structure whereby you're paying on a weekly or monthly basis rather than paying lump sums up in full? Are they willing to give you a payment holiday? You know, will they say, okay, we'll cut off all payments, we'll let you start back again in August? You have to understand from the nature of the contract you're in with those suppliers, but also from the nature of the relationship you have with those suppliers, whether or not any of these types of possibilities could be negotiated with your supplier. Do remember, when you take payment holidays, etc., the debt will eventually have to be paid. So it is important to consider when you are requesting these type of arrangements. Do you think the possibility exists of you being able to repay it in the future when the debt becomes due? Because if you can't, you know, you're going to be in significant difficulties, obviously, then at that time. Contact the creditors early and contact them often to discuss any difficulties you are having making payments. You know, be open and honest and upfront, despite how that might seem counterintuitive, but do be open, honest and upfront with your creditors. At least if you're not ignoring them, you're not going to incur their wrath, for example. If your organization is lucky enough to be cash rich at present, maybe you might consider making early payments to your suppliers to avail of perhaps discounts, which might improve your cash flow in the longer term. Consider cancelling or delaying or reducing any current orders that are outstanding. So any orders that you've put in already with your suppliers, do you really need them in the current time? If you don't need them, can you cancel that order without incurring significant penalties, or would the penalties be, you know, not so significant as to be worth taking the penalty and cancelling the order? Could you delay the order for a period of time so that you're not going to owe for it for a period of time? Could you reduce the order? I mean, it's important to consider that you may not be able to sell your goods and services in the same quantities that you had anticipated before this crisis, and therefore any current orders outstanding may simply be too large for your requirements. So could you reduce those current orders so that when you do have a bill to pay in the future, it's a smaller bill? Regularly assess your suppliers' situation for sustainability. It is important when you are considering restarting your business when we come out of all of this, that you still have suppliers available to meet your needs. And you know, there are many suppliers who may not survive this particular pandemic, and as a result you may not have your supply chain available to you when you're ready to open back up your own business. So do consider the sustainability of your current suppliers, and also look for, you know, perhaps researching cheaper suppliers that are out there, perhaps suppliers that maybe the goods themselves are not cheaper but they're closer to you, so you're incurring less transportation costs, and maybe no import duties, which are currently suspended from outside the EU, which is a good thing. But you've got to consider the sustainability of your current supply chain, and if your current suppliers are not going to be there and are ready and available to you, that's going to impact on your ability to sell to your customers, which in turn will potentially impact on your customers taking their business elsewhere. So it is important to make sure that you are staying in touch with your suppliers, you're negotiating debts where you can with your suppliers, you're renegotiating the supplies that you've already ordered that haven't been received yet, but also that you're researching the possibility of other suppliers. And do be careful when you're researching other suppliers. I'm sure we're all aware of the scam that happened this week with the German company or trying to order face masks, and the resulting loss of 1.5 million. While the 1.5 million has been found in a bank account and the bank account suspended by the fraud squad, that's 1.5 million gone out of that company's cash flow, and they're not getting that back anytime soon. So it is important to understand that, you know, even if you are involved in a scam that in turn is stopped by the fraud squad, you won't be able to get your money back for a period of time until the issue is resolved through the courts. So that 1.5 million is in suspense for quite a period of time for that organization. So do be really careful when you are researching new suppliers that you are satisfied that they are genuine. You know, as much as it might take an extra phone call, etc., it will be necessary to make sure that you're not being scammed. And unfortunately, there are scammers out there taking advantage of this very serious situation for all of us. Another piece of advice in relation to your suppliers, especially if they're outside of the EU, is managing your Forex payments more efficiently and more effectively. The banks, all of the banks are offering huge advice in relation to this area. So it is important that, you know, the advice is free, it's available on their websites, they're offering you different alternatives for managing those Forex payments even more efficiently and effectively now during this crisis than you may have been managing it before. So certainly if you want to reduce the impact of foreign exchange movements on your cash flow, then investigate all the sources available to you for reducing those impacts to an acceptably low level for your business. In relation to the management of stocks, if you are a business selling products, then the key is to have the right product available in the right quantity at the right time and at the right cost. And again, business has been booming for so many different companies over this past number of years, you know, and stock has been so easily available over these past number of years. The supply chains have been open and it has been coming in, and there has been no end to the stock, but there are serious issues in relation to the availability of inventory at this moment in time. So additional crisis problems could include the cost of financing that inventory, from purchasing it, transporting it, storing it, handling that inventory, the insurance costs of it, the security costs associated with it, the administration costs associated with that inventory. You're also at risk of holding inventory that may become obsolete or may deteriorate in condition or value over periods of time. So the stock that you have currently that may not be able to be sold, we'll look at, you know, the costs of that particular inventory and what you could do to manage the situation in future to try and minimize your cash outflows and retain the cash in your business. So at the moment, assess your security systems. You know, you do want to make sure that the inventory, for example, is not stolen. I don't know if you were aware of cars on Grafton Street driving at least through one retail window, and all the stock in the shop was stolen after the car drove into the window. So, you know, even issues like that. Is your stock safe where it is currently? Is there a higher risk of it being stolen? Do you need to increase the security around the inventory to stop it being stolen? Or can your security measures that you currently have in place, can they be reduced? Do you not have that much stock? Do you not need that level of security to manage the stock at this current point in time? And could you either suspend your current security costs, or could you stop them entirely? And this may be an opportunity to either save money at the moment by suspending them, or excuse me, by reducing them, or perhaps save money in the long term by suspending them. So, you know, put a stay on it right now if you like, and ask them to take it up again in 3 months' time when you're back open for business, hopefully. And that might reduce or save money now or in the future. Also assess your current storage facilities where you do have inventory held currently. Is that storage facility appropriate to prevent or reduce deterioration or obsolescence of the inventory? Do you need to do more to it to reduce the risks of obsolescence or deterioration? Or is the level of storage you have at the moment necessary in order to prevent or reduce deterioration or obsolescence? Perhaps you don't have enough inventory in these stored locations for you to need this level of storage. So can you reduce it? Can you reduce the level of storage you have and reduce costs? For example, if you're renting your storage facilities at this moment in time, one would assume that you've already been in contact with your landlords in an attempt to renegotiate the rental expenses or to defer the rental payments to a later period, for example. If you've already borrowed money to purchase the storage facilities and you owe on those loans or mortgages, so have you spoken to the bank already about payment holidays on those long-term loans and mortgages? The banks are open for discussion on all those issues. Also consider your insurance cover, not just for your inventory, but for all parts of your business. You know, is the current insurance cover you have sufficient to pay for any loss of or damage to or deterioration of your inventory, to pay for the loss of business, to pay for the disruption to your business? As Mark said earlier, some businesses have insurance, but it turns out the insurance doesn't cover them for everything they thought they were going to be covered. So having the insurance has had no benefit for them. The current level of insurance that you have, is it necessary? Do you need that level of insurance at this moment in time, considering the current state of your business and your trading capacity? If you do not need that level of insurance at this moment in time, can you contact your insurance company and suspend it? You know, it's like when your car is off the road, you can contact the guards to say it's off the road, so you don't need it taxed at this moment in time. If you don't need your insurance at this moment in time, can you contact them and suspend it and ask them to reinstate the cover from the time your business is back up and running again and needs the insurance again? And while that doesn't increase any cash inflow at this moment in time, it does prevent a cash outflow for a period of time at the end of all this process. So look at all the different types of insurance cover you have in your business at this moment in time and see, can you leverage any of it to help with the cash flow problems, not just now, but in the near and the distant future. In relation to the current stock that you do have on your premises, can you sell it? You know, what you have right now, can you sell it? And if you can't sell it, could you perhaps reduce prices? Would that make it more attractive for customers to come and buy it? Would suppliers perhaps take back surplus stock at this time? It's possibly la la land and dream world to think that they would, but it is a possibility, especially if suppliers want to maintain a good working relationship with you, their customers. It's worth the investigation and it's worth the conversation just in case. And you may find, for example, if you build networks within your business community, you may find that some of your competitors, for example, would be able to shift this inventory online, and maybe they'd be willing to purchase that inventory from you who doesn't have an online presence. And these are the different issues that you could consider at this moment in time to try and shift current inventory so that you're not left with goods that are no longer in demand when all this is over, for example. For future requirements for your inventory, do consider when you are considering the future revenue that your business may be able to generate in the next 3, 6, 9 months, 12 months plus 1 to 2 years. What will your inventory requirements be? So when you are, as Laura said earlier, forecasting your cash flows, you start with the revenue. What do you think you'll be able to earn? And from that, you'll understand what stock you'll need to buy. in order to earn that revenue. For future requirements for inventory, perhaps consider, if you don't already use one, switching to a just-in-time purchasing mechanism, and that would ensure that delivery of supplies occurs immediately prior to the requirement to either use those supplies in manufacture or assembly, or to resell those products. Now, a just-in-time system requires an excellently functioning supply chain, so you switching to just-in-time is not going to be sufficient if the rest of your suppliers are not on board and not available to meet your needs as they fall due. So you do have to consider what inventory you're going to need based on the revenue you think you can generate in the future, and then try and establish some form of distribution, transportation, storage and warehousing of that inventory to meet those needs. And consider different ways in which you can do it. Like we said, you're going to look perhaps to see if other suppliers are more sustainable, more reliable, maybe cheaper going forward. And it is important from the management of stocks perspective that you are minimizing your cash spend on this inventory, and so as to reduce cash outflows from your business. So let's look, that's your own working capital management, you know, and there are many different ways of managing the cash outflow, which needs a lot greater management at this moment in time. But the cash inflow is also extremely important. You want to maximize the inflow as much as possible while not jeopardizing your customer base by putting them under too much pressure to pay, forcing them out of business because you force them to pay up the debts, etc. You want to keep those guys going for the future. Obviously, as Mark, Laura and Ray alluded to earlier, there are numerous sources of government funding available. Some of it is funding that has to be repaid. Some of it is grants that would have to be repaid if you fail to meet the terms and conditions of those grants. And just to be aware, Mark, Laura and Ray said that you would find information relevant to all the different grants that are available on the PwC website. You'll also find the information in these sources also. So the Dublin Chamber of Commerce has a very extensive list of information relevant to COVID-19. Their information does not just consist of information relevant to the type of grants and funding that is available. They also have links to the likes of PwC, Mazars, Grant Thornton and other big professional accountancy firms who have additional information available to you. They have links to the banks, AIB, Bank of Ireland, Ulster Bank, KBC, and I think also another KBC. They don't have RBS. They're not linked to that, but they do provide links on the Dublin Chamber of Commerce site to the banks and the various different sources of information available in those banks. They also have links to all of the different funding that is available and all of the other organisations also. Enterprise Ireland, the same information is available with them. The local enterprise office, the LEOs, the same information is available there. Microfinance Ireland, IDA Ireland, ISME, they all have the same information available to you. So, you know, if you are a member of any one of these organisations, you'll get more membership benefits also on top of this general information that is available. The Citizens Information, or what it was previously called Citizens Advice Bureau, and they also have a huge amount of information for you as a business owner, for the employees also of your business. And the professional accountancy firms, like we said, PwC, Grant Thornton, Mazars, etc., they all have additional information available on their websites. PwC has done some great podcasts in relation to financial management and tax advice, etc. There will be more tax advice on the Griffith College sessions on the 23rd, I think Eilish said, with Paula and Tom on the 23rd of April. And also, you know, all of the Griffith College sessions have advice in all the non-financial areas as well as the financial areas, and the same with those accountancy firms. They're providing podcasts on both financial and non-financial advice. The professional accountancy bodies themselves, I did mention earlier, the ACCA, the Association of Chartered Certified Accountants, at accglobal.com. They have done a comprehensive research into the different industries and the impact COVID-19 has had on the various different industries. They've looked at the impact on large firms and small to medium-sized enterprises also. They've given advice on the difficulties small firms have had accessing funding, for example, and they provide a huge amount of resources on their website. The CPA Ireland, Certified Public Accountants Ireland, they also provide a huge amount of advice, and information on all the different sources of funding that is available, the additional expertise that are required, the help that is out there for free and not for free, etc. And the banks themselves, AIB, Bank of Ireland, Ulster Bank, RBS, KBC, they all, once you land on any one of their web pages, their initial web page, their homepage, they all have a big banner across the top saying COVID-19 resources. You can't miss it. So if you want information from any of these sources on financial issues, on non-financial issues, if you need assistance, go to any of these and you will find a huge volume of information available to you, not just as a small business manager and owner, but also in relation to your industry, in relation to the economy in general. And these are updated regularly. So for example, yesterday the government announced that the wages subsidy scheme is going to be increased to 85% for the lower wage earners. So these are being updated on a regular basis, the most up-to-date being yesterday. So despite the fact you may have looked at these already over the course of the last 4 to 5 weeks, you should be looking at them again and again and again, because they are being updated on a regular basis. So let's have a look at the type of assistance available. This was taken from the Dublin Chamber of Commerce website on the 8th of 4th, 2020. Like I said, there was an update yesterday to one element of it, which is the wages subsidy scheme. But the SBCI COVID-19 Working Capital Loan Scheme has been increased and extended. In relation to the SBI scheme, there is eligibility criteria. You do have to complete the eligibility form first and get your eligibility cert before you can approach the SBCI for this working capital loan. But you can borrow between 25,000 and 1.5 million at an interest rate of 4%. I know one of you earlier was saying that you had an interest rate of 4.6% for microfinance. I was under the impression the microfinancing loans were at 4.5%, and that had been reduced from 7.8% only last week as a result of government intervention there. So the SBCI working capital loan scheme, an interest rate of 4%. The terms range from 1 year to 3 years, and the loans can be unsecured up to €500,000, and a maximum interest rate will be 4.5% maximum. And the credit guarantee scheme also available there. The future growth loan scheme also available through the SBCI. Excuse me, SBCI. This is going to be released in tranches. It's for longer term loans to businesses impacted by COVID-19. The loans will range from 100,000 to a maximum of 3 million. The term of the loan is 8 to 10 years. They can start at 500,000 unsecured. Again, interest only repayments may be available at the start of the loan, so that may be something useful. The new €2,500 business continuity voucher, this is available from your local enterprise office. It's available, for businesses across every sector that employ up to 50 people, and the voucher can be used to develop short-term and long-term strategies to respond to COVID-19. The microfinance loans that one of you spoke about earlier, there's another 13 million after being made available for those special loans to small firms, and they're being administered by Microfinance Ireland. It is better to apply through LEO, the local enterprise office, and that's when you'll get your rate at 4.5%. It's my understanding if you apply directly to Microfinance Ireland for those loans, the interest rate is higher. If the loans can be made up to 50,000, no repayments and no interest charged in the first 6 months. So this might be a good source of finance for the short term. We see the trading online voucher scheme. This one, so one of you was talking earlier about moving your business online. This is available for micro enterprises, and the businesses that have already successfully utilized the voucher can now apply for a second voucher of up to €2,500. They can now also be used for a subscription to low-cost online retailing platform solutions, and the grant is available to cover 90% of the cost of an online initiative. In conjunction with that, we have the new COVID-19 retail online scheme being delivered through Enterprise Ireland. It's a 2 million retail online scheme available to businesses with more than 10 staff, and the scheme is available, like I said, through Enterprise Ireland. We also have the Sustaining Enterprise Fund available through Enterprise Ireland also. It's specifically aimed at firms with 10 or more employees impacted by COVID-19 that are considered vulnerable but viable. It's operated by Enterprise Ireland and will provide repayable advances up to €800,000, and the grant will only become repayable if and when a business returns to financial good health. The Business Financial Planning Grant, available through Enterprise Ireland. This grant to the value of €5,000 has been introduced to assist companies in the development of a business sustainment plan and to engage the services of an approved financial consultant. So €5,000 to help you pay a financial consultant to help you plan for the long-term sustainability of the business. And the Lean Business Improvement Grant, also through Enterprise Ireland and the IDA. This one is a new €2,500 grant introduced to help companies access expertise to review and optimize operations at a time of crisis and identify the key measures needed to ensure continued viability. So there are a huge number of grants available, but eligibility criteria applies. And as Ray alluded to earlier, and Mark and Laura, when we talked about the one pager of information needed in Switzerland and Germany versus the information that's required here, it's not easy to get these grants and funding. There's a huge amount of information that has to be gathered and collated and documented first as part of your application for the grant or the funding. So it's really important to understand what is required in relation to these grants and funding, and that you get all the information together first and you have somebody review it for you before you make your application. Obviously then this becomes a time-consuming process. You may have applied for some of these already. You're still entitled to apply for more, and as more are introduced, which they will be as a result of the European fund that's now been made available, it's important that you access this information on a regular basis in order to ensure that you're up to date on all the grants that are available. There's also additional government assistance, and I'm not going to go into it in too much detail because it will be covered in the tax session by Tom and Paula on the 23rd of April. But in some instances, there has been a reduction of or an elimination of commercial rates. You need to speak to your local council in relation to that to find out what their particular circumstances are and what their grants and services available are. But some councils have reduced or eliminated commercial rates for commercial customers. Certainly under revenue you can file on time, but you can delay your payments, which will also just delay the cash outflow out of your business for a period. Revenue will expedite the payment of any instalment on excess research and development tax credits that are due. You can certainly use the VAT system in a very efficient and effective way to extend your payment dates and to claim refunds perhaps that you didn't know you were entitled to. And again, taking advice from Paula and Tom in the tax class will help you there. Revenue debt enforcement activity has been suspended, so they're not coming auditing your business anytime soon. But it is important to remember that they'll be back in business at a later date. And as Mark said earlier, they may be slow at what they do, but they're thorough. It's important that you have all your documentation in place, all your information up to date, that you keep on top of all of your information yourself so that you have all the necessary documentation for revenue should they come looking. Interest on late VAT repayments for January and March has been suspended. That may be extended further. Again, you have to keep an eye on the revenue sites for that. And those who have phased payments in place can opt to defer a payment or apply to suspend arrangements for up to 6 months. So this is also something that is available to you to maximize your cash flow at this moment in time. So short-term use of the government assistance that is available to you already, and then for the grants and the funding, some of it short-term, some of it to help plan for the future, some of it put in place to pay for the period of time in the future. But don't forget about all of this, guys. It's repayable in the majority of it. So if you're going to borrow this money, you're going to bring legacy debt with you into your restarting your business section, and this will have to be built into all your cash flow forecasts, etc. But they are available to you. Most of you will probably need it in the short term. The problem is getting access to it. It is slow. It's absolutely administratively slow. Certainly in the UK, there's been serious complaints as a result of taking more than 2 weeks to even get your application considered. And in those 2 weeks period, you know, the cash flow that you needed to pay your staff wages, to pay suppliers, etc., it didn't arrive. And businesses, while they might have been able to manage for 2 weeks, they didn't think they would be able to manage for 4 weeks, and they were putting pressure on the government offices to hurry up with this funding. So it is taking time. You do need a huge amount of information together before you can make the applications. Be very sure on what you need first, get everything together, clarify that you have everything before you make the application for the funding. So as we've alluded to from the very beginning, cash is king. You know, no cash, no business, end of story. So we're going to look at now the cash budgets and the cash flow forecasts. We're going to look at the advice for dealing with the banks, and we're going to see how you can get the most out of your accountant. Many of you may not have a regular accountant working in your business. Perhaps you only have an accountant at certain times of the year. Perhaps you keep one on a retainer. Perhaps your accountant only prepares your tax returns in October, as I do for all my family for free, I might add. But I don't think most of your accountants will do it for free. And if you don't have an accountant, you know, you do have the business continuity grant, etc., and the lean business improvement grants available to you to perhaps hire one for this moment in time. And those grants may go some way towards paying for the services of this expert. But the expert will look at how you can use them to get the most out of them towards the end of this presentation. So before we move on to looking at this next section, I might pause there for a moment and see if there's been any questions coming in.
Hey, Suzanne, yeah, really interesting. I mean, I think just the sheer volume of the range of supports that are there, it's incredible to see it, and it's really good to see that list. And it is a lot of information. So I suppose just to remind the participants, the slides and the recording of this will be up there, so you can revisit all of that. Really, really good and practical guides when we come back. There's one quick question from Carmel, and guys, do remember you can ask your questions through the Q&A function. Carmel is wondering, where do you apply for the €2,500 business continuity voucher and the trading online voucher scheme?
Both of those seem to be available from the Enterprise Ireland. So both can be obtained from Enterprise Ireland, and the Lean Business Improvement Grant is also available from the IDA. So you go through those sources for that.
Okay, that's brilliant. I think that's it. Now we have another question from Lorraine. It's a slightly more general one, but I suppose it's an interesting one in terms of business continuity for some of our participants, depending on the type of business that you have. And it's really food for thought, I suppose, in terms of changes to consumer behaviour. So will people have a problem going back shopping into retail again? Is retail going to be, you know, significantly changed into the longer term beyond the restrictions that are imposed at the moment? Are people going to be more comfortable doing online shopping? Not an accounting question, a perspective, I suppose, or an opinion.
Yeah, I think just an opinion at this moment in time, but you know, a valid opinion. It was also expressed in the first session by the different presenters in the first session. We've already seen, for example, the impact on Debenhams. We've seen the impact on Oasis and Warehouse that went into administration yesterday in the UK. You know, retail was in trouble long before COVID-19, and I think in Ireland, probably their biggest problem here was the rental expense. You know, the cost of land, the cost of renting premises is absolutely exorbitant, some would say, in this jurisdiction. So we've seen already that retail was in trouble before COVID-19. This will certainly have exacerbated to some extent their problems, but also shown how online trading can replace the retailer, can replace it for certain products anyway. It can certainly replace the retailer. So yeah, it's an opinion that consumer preferences will change for their habits are going to change, and you know, maybe they'll prefer now to trade online and to buy online rather than to travel to busy shopping centers and queue for 2 hours for parking in and out of the shopping centers, etc. Yeah, this could have a huge impact on retail going forward, in my own personal opinion also.
Yeah, and I think, I suppose, it's something that has come up in last week as well, and it's really about seeing the opportunity in crisis and trying to say, well, what does that mean for me, or how can I adapt for that, and maybe think to the future of different ways of doing things. Cathal had asked a question earlier. Cathal was, he's currently in construction consultancy related business. Now obviously his revenue has reduced dramatically, so as part of business continuity, he's looking to diversify into online retail, as it happens. Using the existing business, so kind of using that as a platform to diversify into online retail. So I suppose in terms of the supports that are out there for new product development, was there anything specific there that you'd point them towards?
Well, yeah, certainly the Business Financial Planning Grant and the Lean Business Improvement Grant are both available to help businesses plan and, if necessary, change strategy for sustainability in the future. So that would be something that's available there to call. Also, there's a Competitive Start Fund that I haven't got in the list there. The Competitive Start Fund is in conjunction with the Seed and Venture Capital Initiative, which is both available for new organizations or organizations who want to do something new and innovative. And both of those grants are available through Enterprise Ireland. So certainly you could look and assess the eligibility criteria. You may or may not meet the eligibility criteria. I don't know what it is exactly, but there is criteria. So you'd have to investigate both of those. But the Competitive Start Fund and the Seed and Venture Capital Initiative, for doing something completely different, for same product, different methodology of running a business, different type of business, you know, if you're going to go completely online, etc. So you could look at both of those, the last two in the list there, and the Competitive Start Fund and the Seed and Venture Capital Initiative, both available from Enterprise Ireland.
Brilliant, thanks Suzanne. I hope that helps, Cathal. Jerry then, now Jerry, I suppose we can't speak on in terms of decisions that these, in terms of what has been offered by these bodies, but Jerry's question is just wondering around the interest rate of microfinance. It's at 4.5% when the government is borrowing at a rate of almost zero.
Yeah, lobby your local politician on that one, you know. That's what I would say. Give your local politician and councillor a call and ask them what's the story with this one, you know.
Yeah, yeah.
Now, the one thing with some of the microfinance loans is that there is, in some instances, there is no interest payable on the first 6 months of the loans. So if you felt your business would turn around within 6 months, you'd get away with an interest-free loan for 6 months. That's something to consider. Also, you can have a payment break of both the interest and the capital sum for a period of time with some of those loans as well, which means nothing becomes repayable for a short period of time, and perhaps by the time it does become repayable, your business is up and running and you could perhaps repay it quickly, you know. So you could consider it from that perspective, but I would be lobbying my local politician on that one, see if they can move them along to do anything more effective, you know.
Yeah, and we heard when we were talking last week about the revenue issues with Naomi and so on, you know, she was saying ring revenue, ask the questions, because as people are ringing them and giving them these queries, they're responding to them, they're updating the FAQ. So it is such a rapidly evolving situation that government revenue, everybody is changing. I mean, I think you were saying there was something changed just yesterday, Suzanne, after you put everything
and
together.
that microfinance loan that's at 4.5%, that was at 7.8% last week, you know. So it is an evolving situation, and I think the more requests for additional supports or changes in the current supports from the people affected, the more the government will be perhaps pushed towards action. So yeah, I'd absolutely advise people, if they're not happy with it and they think it is a bit unfair, you know, go and talk to your local politician, your local TD, and tell them your views and ask them to represent those views. That's what they're there for.
Yeah, very good. So if anybody else has any other questions, do keep them coming in as well. Like I said, it's overwhelming, the range of supports that are there, to varying degrees of how good they are and otherwise. So I suppose going back to what Mark said and what you've been saying, Suzanne, you just do what you can to access what's there and consider what it is you really need for your particular circumstances. Just a positive note before I let you get back. There's Suzanne from Trish. On a positive note, her customers are contacting, saying that they're actually really looking forward. This is going back to the idea of retail and the changed landscape retail. Her customers are saying we can't wait to go back into the store when they reopen. So people are really missing the shopping and the service experience and that personal service. Yes, absolutely, Trish, we're not writing you off, but it's just, I suppose, considering all of the opportunity that is there for change in the future as well. I know I'm in touch with some service businesses that I would use regularly, and I feel the same way. I can't wait to get back to that routine or some form of normality.
I think we'll all be running back to our hairdressers and the coffee shops.
Absolutely.
Absolutely.
Yeah. Getting a proper cup of coffee. I cannot wait.
Yeah.
So yeah, absolutely, Trish. It's not all doom and gloom. It's just, I suppose, considering alternatives for businesses, and really kind of using the opportunity to have a think about how we're doing things and what we might do differently. Jen, no, that's actually great to have that relationship with your customers.
It's fabulous, fabulous. Okay, I continue on.
Yeah, go for it.
Any questions for the moment? Okay, so we said we were going to look at the cash budgets and the cash flow forecasts before looking at how to deal with the bank and getting the most out of your accountant. So the budget, certainly my experience of lecturing to small business owners in the past has been that these types of things are done, but not very specifically, and possibly on a daily basis on the back of a cardboard box. Sometimes it's put down, but let's have a look and see anyway. In relation to a budget, it's a quantitative statement for a defined period of time, which may include planned revenue, expenses, assets, liabilities, and cash flows. Whereas the cash flow forecast is a plan that shows how much money a business expects to receive in and pay out over a given period of time. So from a cash flow, a financial management perspective, what's coming in, what's going out? That's the basis of it all that we need to know. For the crisis needs, you do need to understand cash flows, and you need to understand when the cash flows will not be sufficient to meet your needs, and then identify when additional arrangements will have to be put in place to assist the organisation. As Laura explained in her example earlier, for the company that she was assisting, they were fine from now, but by August they were going to run out of money. So they would not know that unless they've put the proper documentation in place, they've gathered all the relevant data, they've made the necessary predictions, then they can see that they're going to run out of money in August. But there's no point in waiting till August to address that issue, especially with those grants, because the application process is long and time consuming. So to know that early and to be able to investigate what sources of finance will be available and to start the application forms early means that by August, you shouldn't have a problem in managing the cash flow situation. So AIB, as the guys alluded to earlier, all the banks tend to have a small business cash flow planner or some form of cash flow planner available on their websites. I have downloaded the AIB one. I'll just open it for you there to have a look at the AIB one. If I can locate it there. So this is what the AIB Small Business Cash Flow Planner looks like. You can access this on their website, and it's just it's a pre-populated Excel sheet to help you understand how to put a cash flow forecast together. So if you like, if this is for year one and you have all the months across the top here, you can change this to weeks. So you could do 13 weeks across the top here. You first of all look at all the receipts, all of the revenue you can get into your business. We looked at the debtor management, we looked at reducing outflows for inventory and creditors, but we're looking at money coming into the business from all the different sources, including the sale of your goods and services, cash received from debtors that were outstanding, and proceeds from any drawdowns of loans, any grants, any other form of assistance. Have you been able to, for example, sell off any idle assets that are not in use or not in use at present? Could you sell them off and increase cash inflow at certain periods of time? Do you have any other income coming into your business? So you would document this across here as your income. The next on your list here would be your expenditure. And again, you have to have identified from your audit of your bank account and your credit card spending exactly what payments you have been making, whether they are contractual arrangements, whether they continue to have to be made, etc. So what payments are due within the next 30, 60, 90 days, or what payments are due on a week-by-week basis if you were doing this for 13 weeks. Capital expenditure, certainly as an accountant, I would be advising you if you have capital expenditure that you are committed to in contractual arrangements and you can't defer or you can't cancel, you should include them in here. But any capital expenditure that's not necessary and can be deferred or cancelled at this moment in time absolutely should be. You don't need to be spending money on expansion when you're not even open for business at this time. You look at all your other costs, so your wages and salaries costs, any payments that have to be made in tax, assurances, pension contributions, corporation preliminary tax, the utilities, etc. You include them all in here, your operating expenses. Make sure you know exactly what they are and your financial expenses, and fill them in as and when they fall due over the next period of time. Remember, when you are applying for all of this funding and you are putting these cash flow forecasts together, make sure you have included any funding that you've sought from the government in the form of those grants. Make sure you are including your understanding of what you can receive from sales, what you can receive from your renegotiated terms with your debtors, what you anticipate spending with your renegotiated terms with your creditors, your landlord, your bank, etc. So this cash flow forecast should be put together, including all the areas that you're already aware of and all the adjustments you've already made in your business, etc. So if we go back to the PowerPoint, oh, apologies, PowerPoint went missing. I don't know if there again. Apologies for that. Shut that down. So here we were before we opened up that AIB planner. Prepare the cash flow forecast for the immediate term and then extend it, extend it and extend it. As Laura was saying, certainly you should be looking at 2021 to 2022. The banks in the UK have advised customers to use their original predictions or perhaps even their original performance in 2018, 2019 to predict 2021 and 2022. I would have said that that's very optimistic. I wouldn't imagine the Irish banks will give the same type of guidance. I would imagine the Irish banks want you to make predictions based on your understanding of the impact of COVID-19. Remember, the additional €1 billion that has been made available to business, the additional cost to the healthcare sector, which has not been calculated, the additional cost to the social welfare system, which has not been fully identified, that is all going to have to be paid back. And we're the ones who are going to have to pay it, whether Fianna Fáil and Fianna Gael working together, believe it or not, it will result in higher taxes, etc. eventually for all of us. So it all has to be considered when you're putting your cash flow forecast together. Like we said earlier, predict a high, medium and low impact and therefore prepare 3 forecasts for each period, and possibly use your startup year or your post-2008 performance year as a starting guide to predict income from customers for a high impact forecast. You start with your revenue impact, and then from the revenue, all the other variable expenses will automatically flow. And the fixed costs, if you have managed to renegotiate them, they're the ones that won't be changing depending on the renegotiation. And like I just said to you there, prepare the forecast to include all measures that have already been taken by you as a business owner or manager to reduce the cash outflows and to increase the cash inflows to your business. Without this cash flow forecast, no one's even looking at your application. So this has to be put together in addition to the business plan. Now, I haven't got a business plan here to show you, but again, the banks do have templates for business plans available on their websites, which you could use to plan what you want to do and how you plan to do it and why you plan to do it that way over the next year to 2 years. And that will all have to be part of your loan applications to the banks. So let's look at what you have to do with dealing with the banks. Every single bank has a dedicated COVID-19 page. So once you land on their home page, you can straight away see that they have a section devoted to COVID-19 resources and facilities. And if you click in there, you'll see everything that the bank can offer you, both financial and non-financial, free and not free, up there on their websites. The banks are certainly going to be lending to viable businesses, but you have to meet certain eligibility criteria. So it is really important you understand the criteria, and it is important that you gather the data necessary to prove that you meet the criteria before you make that application, or it's just going to be returned to you and rejected. And certainly, despite all those sources of funding available through the government and the different enterprise offices, your current lender is going to be the quickest source of additional finance. So your current bank, they are going to be the quickest source of liquidity for you. And typical requests going into the banks at the moment is payment break loans, emergency working capital loans, and increased and extended overdraft facilities. So these are the ones that can be negotiated most quickly between you and your lender, certainly quicker in most instances than looking for those government grants and funding. What's really important, yet again, as has been important the whole way through, is to have a good working relationship with your bank manager. You don't want to be a nameless, faceless person, you know, just another number on the screen. You want a personal relationship with these people, you know, personal stories, etc. You want that type of relationship so that they can work with you more quickly. Certainly questions that are going to be asked by the bank as part of the eligibility assessment: has COVID-19 impacted your business and how? Now, it's impacted all of us, you know, but not all of us in the same way and not all of us to the same extent, but it has impacted all of us. But you have to be able to show how. You know, has it meant a reduction in revenue? Has it meant an increase in costs? Has it meant a closure of your business? Has it meant a reduction? All of it has to be very specifically outlined to the bank. You also have to show them what steps you've taken to improve the position of the organisation. How have you managed your debtors, your creditors, your inventory, your loan arrangements? How have you managed your negotiations with your landlords, with your insurance companies, etc., etc., etc. You've got to be able to show them that you have taken all the steps that you physically possibly can to improve your own situation. Then you tell them the type of assistance that you need, the amount that you need, what is the purpose of the loan, and you also have to demonstrate a repayment capacity, and that will be with your cash flow forecasts and your business plan, etc. Other information that's going to be required by the bank, they're going to require you to produce the last set of audited financial statements. So it's important that you have those readily available. You'll also have to produce a tax compliance cert. Revenue certainly have suggested that the current tax compliance cert will still apply because Revenue are behind in producing new ones, etc. An up-to-date statement of affairs for both the business and the owner. Now, this is no different to the 2008 crisis. Banks were lending back then as well, but they were more cautious about the lending, and they certainly wanted some assurances from the banks themselves, from the owners of the businesses themselves, that they were in a good position to assist if necessary. And then they also want those cash flow forecasts for the next 3, 6, 9 months, and then the next 1 to 2 years. So that's quite a lot of information you have to have gathered together for your banks. To make those cash flow forecasts and design those business plans, you have to have a really good understanding of your business, a very detailed audit of your business inflows and outflows, so that you can then try and predict those cash flows for your business, which won't just be based on what you can predict for your business, but what are the predictions for your industry, the economy, etc. So there's a very detailed amount of information you have to go through to get yourself ready. Banks want to know that you know your business. So show them that you know your business inside out. The bank's advice is to anticipate your problems early and go to them early. Communicate with them regularly and often. This is a phrase we've used time and again in this presentation. You have to know your own business and you have to know your industry. Be ready, do the homework, do the research, be prepared before you go near the bank. Have all your documentation ready. Be clear on what you need. Gather the documentation, put it together, then go to them. They will want you to be willing to look at opportunities and develop. So you consider them also, for example, going online with your business, reducing your trading, closing some stores, reducing capital expenditure projects, etc. They maybe ask you what your level of willingness is to invest your own funds. And if you don't want to invest your own funds in the business because you don't have any, as Mark alluded to earlier, can you increase equity into the business? Can you bring in other business partners, for example, who might be willing to assist you at this moment in time? They want to be sure that you're matching the source of funds to the purpose. So they don't want you, for example, they do not want you, for example, going through the situation where you are borrowing money for working capital and you're using capital expenditure loans for that, and vice versa. Certainly they're saying that the surviving businesses will be leaner, will be retaining cash, and there will be really good, strong monitoring and strong management within the businesses. They want you to use your professional accountant effectively. So what can you get out of your accountant? Certainly you have to know what stage your business is at, and you have to know what condition your business is in, and the accountant can help you with both of those scenarios. You have to know what information you need to have readily available for decision making for your own business, for decision making and information to include in applications to banks, applications to government, to revenue, etc. Your accountant can help you with all of this so long as you work with them and not against them. You know, help them put this information together for you by providing you with all the details. The budgeting, the forecasting, the financial planning, they can do this for you. They can budget and they can compare actual with management accounting information. They can compare your actual performance with your budget, and they can offer recommendations on this. They can certainly advise you on capital investment projects that you plan on undertaking. They can deal with the banks for you, with the banks, with your lenders, with your government sources for grants and assistance, etc. Your accountant can also deal with revenue and the CRO for you if you wish, and if you give them the permission to do it. You do have to, and I don't want to put a dampener on everybody, but you do have to remember as business owners and managers and directors of business that you have legal responsibilities in relation to your creditors. Good corporate governance is essential. You know, you've got to ensure that you're aware of your statutory obligations and that you are monitoring the performance of the business and understanding when it's time to pull the plug if necessary. Hopefully that won't be necessary, but if it is, you need, from a corporate governance perspective and from a legal perspective, to understand when and where that might happen and how to go about the process. The practical need at this moment in time is real-time, accurate financial information. So day-to-day updates on your financial position and your financial performance. And as mentioned already by the banks, they expect that surviving businesses will be leaner. So you're going to be tighter, you're going to be retaining more cash. You should have excellent monitoring within your business of your cash inflows, your cash outflows, your systems, your processes, your people, and you should have a really strong management team pull them behind you, bring them in with you, keep them on board, keep checking on them, show them the love, find online courses they can do to keep themselves busy if they're not working from home at this moment in time. There are plenty of free ones out there that can help them upskill and become ready to help you restart your business in the future. And from an accountant's point of view and the cash point of view, attention to detail will win the battle. Look after the pennies, the pounds will certainly look after themselves. Thanks very much for listening. I hope the presentation was interesting and useful for you. And if you have any other questions, I'll take them from you there, even though we have gone over the time. So I don't know if we have time for questions, Eilish, I don't know.
Yeah, I think we will. If people have other things, they can always catch up on the video. They can go to the end of it if they have to leave us. We don't have too many questions anyway. We addressed most of them earlier. And there's one question from Elizabeth, and I'm not sure if you'll be able to answer this or not, Suzanne. But it's something we can certainly look into if you can't. Elizabeth is wondering what range of rent agreements and plans are businesses agreeing with their landlord? It might be more a question for our participants really to share their experience.
Yeah, I think that'd be more for the financial consultants to answer that one. Yeah, they would have direct experience with it at this moment in time, so they might be better able to answer that one.
Yeah, perfect. Okay, so thanks for that, Elizabeth. We will, I'll look into whether or not there is any information on that and maybe put it up with the online resources as well, or at least a link to where you might get some answers. So thank you very much for that, Suzanne. I mean, it was so comprehensive and just the sheer range of supports. It's great to have them listed there that people can work their way through and see what it is that is appropriate for them to access, what's going to work for them. I suppose from what everybody said, from Mark, Laura, Ray, yourself, really it's the key at the moment is survival, but also thinking about the future, also thinking about what it's going to look like when this is all over, and like you mentioned at the end, maintaining good governance, as well as you know, all different scenario plannings and so on. So it was really interesting. One thing that struck me, I mean, all of you said that a requirement to access all of these supports, you're going to need an up-to-date business plan, and you're going to need your cash flow forecast and so on to be in place. That's not just, you know, I wouldn't view that as a requirement. You know, it's viewed as knowledge is power, and you know, with that information, you can actually make better and more informed decisions. So that'd be fair to say, Suzanne. So it's for their benefit as well as requirements. Yeah.
Yeah, and the business plan is not just financial, as you know. There's a huge amount of obviously non-financial considerations in a business plan. So it does force you to think wider around your business and, you know, scenario, what it might look like in the future, and predict what it might look like from lots of different perspectives, not just the financial. So they don't want to hear just the financial stuff. They want the non-financial creative element also.
Yeah, the 360 review and bring those marketing elements in. Yeah, absolutely. Okay, so that's it on the question front, I think. If you do have any other follow-up queries, or maybe when you revisit the slides later, if you do have any other queries, feel free to send them on to myself or Michael, and we will pass them on. We will get them all answered. So that is our final one of this week. So I look forward to seeing you all on Monday morning, and I hope you have a great weekend. So thank you very much for joining us today.
Thanks a lot, guys. Thank you.
Thank you. Bye.
Bye.